The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. We're going to start the show a little bit differently today, and we're going to start out with sugar the sweet. As you can see, we had a really nice move in sugar that got up to the a 1330 level, and now we've sold off to 1236. Folks, the reason why I'm bringing this sugar up today because it illustrates a really strong point that we had in the Treasury bonds when they were trading at 147, how it stays at these 61% retracement levels for a very, very long time. As you can see, in January, we hit it the first time up there at that 1333. We hit it again on February the 22nd. The 23rd, 24th, and 25th. 4 days in a row, we're sitting exactly at the 61% retracement with no movement to the upside. Then you can see once the market went below 1310, that was telling you that resistance that was there was incredibly strong. And so that's why you want to look at these numbers with a little bit of respect sometimes, because they don't work all the time, but gee, when they work like this, you have to respect that there must have been some type of supply up there that kept the sugar from going higher. Now what we're looking at, we're trading around 1236 today. We have some good support again down at the 78% level, down about another 40 cents. That would take you down to about 1185. So watch that level very closely in the sugar. So this is May sugar that we're dealing in now. Now the next one we want to take a look at is the cocoa. The whole hot chocolate. We'll get this up here and take a look at this. We'll bring this up here, and you'll be seeing the 135 pattern that we highlighted way back in early February. That led to a move that went from 2140 all the way up to 2360. That's a substantial move in cocoa. That was your 61% retracement from the high back on December the 26th. And then, of course, you see what's happened the last few days. The key to this market was once it went below 2250, you took out the previous week's low. You certainly don't want to put your stop at break even at that point, because you've made a substantial amount of money, so you want to at least book some of it. Now you see where we are now. What we want to do and what we're going to do is we're going to look at it now when we stretch this out to see what could be happening now in the hot chocolate. So take a look here at cocoa. You see the 135 pattern that had its formation over October, December, and February. Then we had the nice 78% rally up to 2375. And now we have the big down day yesterday, taking out the lows of February. That sets up a move to 2080, folks. At 2080, you'll be sitting right at the 78% level of the low from October. That will also be, as shown by the gray triangles there, that is a bullish Gartley pattern. And if you have a little bit of creativity in your thinking, go back and you can see the head and shoulders pattern that is setting there too. So that level of 2080 in the cocoa, should we get there, would be very, very important. Now, maybe we stop exactly where we stopped yesterday. That could also happen, but the charts are saying that we should be looking at 2080 in the cocoa. That's what it looks like. So let's keep an open mind on that one. It looks very, very interesting for a good place to get long the cocoa if we get down to that level. You have pattern and price and everything together at the same time. Now here's another one that we've been watching very closely. We'll get into cocoa, coffee, and we'll do coffee right now. We had that big move from the 97 level. We got all the way up to $100.50. Then we had a 3-cent pullback, taking you down to new lows. What we did on that one was to put our stop at break even on that coffee so that you wouldn't risk anything. At one time, of course, it had over $1,000 profit. If you had 2 contracts on, the best way to do that is to take one off and let one ride at break even. So that would have been a break even trade. And but I would be looking to rebuy that. And a lot of times these things sell off for one day and then they turn, but we'll have to keep a close eye on it. Folks, this is all about risk control. These patterns, they don't work all the time. Nothing works all the time. So you have to decide, what your risk is when you're doing it. What the patterns and ratios do is to help define the risk that you're dealing in, and that's one of the key things to look at. Now let's take a look at the stock market. We'll start out here with the E-mini S&P here today. You'll get a pretty good idea what happened. Yesterday's low, you can see, was an exact 382 of the low from way back on February the 9th. That stopped right at the 2766 level. We matched the low that we made back on the 21st of February. You'll notice the high we made up there. We know that was the big daily 78% level. And what we've done last night was rally up to the 61% retracement at 27.99. So far, that's been the overnight high. That is a 61% retracement, and that's going to be the key level to look at today between 27.99 and 28.07, because those are the retracement numbers that we're looking at. Longer term, we still believe that this has been a very, very major top being formed up in here. We'll bring this up so you can see the daily picture, and it's a lot, you can see it's very similar type pattern, but when you look at the hourly chart, it brings it into focus so that you can see actually the trading that's going on, and then also the price levels that are so very, very important. By the way, folks, we have Norm Winsky as our guest at the break, so that'll always be a lot of fun to see what he has to say. Let's take a look at the NASDAQ, because that's been a really interesting one too. If we look at the NASDAQ on an hourly basis, you're going to see this is the pattern that we posted yesterday. The ABCD pattern up there at that 7,200 level, that was right after the market opened. As you can see, the market then sold off 120 points, and actually 130 points, stopping exactly at the 78% level. Folks, look at the higher bottoms on this chart. I mean, you had a higher bottom on the 15th, higher bottom on the 21st, higher bottom on the 27th, higher bottom on March the 4th. This market still doesn't want to go down. We need it to get it below 70, 80 if it's going to go down. I mean, it's got to move 100 points, just to break the trend. So this thing has been very, very powerful. And all we did last night is we did get above the 61% retracement in the NASDAQ. The S&P made it exactly there at 27.98, but the NASDAQ was much, much stronger. And this morning, as we see this, we've got the S&P trading around 27.93.5 right now. So that's a few points under that market, but it's still, quite a bit higher than one would expect, considering that we were down so much at one time in the NASDAQ. We were down 30 handles in the S&P, and we came back 61% of that. This is going to be a good test. Let's just put it that way. It'll be very, very interesting what happens. So we need to pay very close attention to those levels today, because if we make new highs, that would be something very, very powerful, especially after that type of move that we had yesterday. So we'll watch that. And when we get back from the break, I wanted to talk just a little bit about a couple of things that we got from some of our friends that read the Elliott Wave tea leaves, because they're very interesting. We'll cover those when we get back. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks. We're going to take a look at this chart that was furnished to us by the Elliott Wave International Group. They do a lot of really good research, and basically what they're showing here is the fact that the Federal Reserve does exactly the opposite of what the market thinks it's doing. If you look at the time period, we'll go through all three of these because it's important to realize that the Fed they're not active, they're reactive. So if you look here, that during the 2000 to 2002 period, there was 13 U.S. Federal Reserve rate cuts between 2000 and 2003. The market dropped 51%. In 2007, 2008, there were 10 Fed rate cuts. The market dropped 58%. And between 2015 and 2019, there were 9 federal rate increases and the market went up. So just because they do something with rates, the market usually does the opposite. The one thing about this chart that really brings a lot of memories back, if you look at that time period at 2002, that's when the bottom was made. It was not made on 9/11. Not September of 2001. It wasn't until April of 2002 that market, finally bottomed and then got back to its old highs. So just keep in mind that what you're seeing with the Federal Reserve isn't always the way it seems. That's one thing to keep in mind. We've been watching these Treasury bonds for quite some time. We still believe that they are heading lower and possibly quite a bit. As we've said before, we'll look at the notes this time because we've looked at the bonds yesterday quite a bit, but you'll see on the long-term picture here on the interest rates, we had these rallies here that you can see over the past several years. This is a weekly chart. The last 2 equal rallies we had ended in October of 2018. This one ended about 4 or 5 weeks ago. And as we heard from our friend Bill Meridian yesterday from Cycles Research out of Vienna, Austria, that his work is pointing for the bonds to go lower, i.e. higher interest rates, at least through this month of March. So we'll see. And as you can see with the start we've had this month, it appears that is the direction that we're looking at. And again, that has nothing to do with stock prices. So, let the markets, look at the patterns that you're looking at. That's really what you've got to go on, unless you're a super smart fundamentalist, which is not what we do here at you know, in at least my section of TFNN, I'm a pattern recognition trader, folks. I look at the charts, try not to listen to the news, and believe me, that's difficult. But that's what we try to do here, you know, to get a better edge of you know, what we're looking at. Now, I wanted to share a chart from, we'll be talking with Norm Winsky about this, but this comes from our friend and fellow contributor to TFNN, Tim Bost, Financial Cycles Weekly, and he brought this to my attention over the weekend. This is the same thing that we're looking at, that Mercury begins this 3-day retrograde period on Tuesday, March 5th. And that's going to be quite interesting. Of course, we're over the period of the new moon, and that'll be very interesting also. We'll ask Norm about this because I think this is one of the things that he wanted to forecast or talk to us about coming on here today, because it's such a critical level. So we'll run that by him also, just to get a better idea. But I do like the fact that Mercury is there at the same time that we have the lunar cycles. Those are two short-term cycles that, you know, act pretty well, and Mercury in astrological terms is the planet, you know, of communication. So we'll see if that's, remember, these are all related to probabilities, folks. They're not related to, you know, perfection or certainty of any kind. It's all related to probability. So keep it, you know, keep that in mind as you look at this. Hold on here one second. I wanted to get one other one here that that we're looking at in the currencies that we're getting really, really close to, and that is this Japanese yen on a daily basis. This is going to be very, very interesting pattern when we get up here, because we will have a head and shoulders pattern up there at that 112.40 level. If we get there, we're trading right near the 112 level right now, so it's only a few pips away. We could make that relatively easily, but if it gets there, that's going to be a real interesting one, you know, to pay very, very close attention to, as we always do, you know, with the currencies. The British pound that we did last week has been acting extremely well. We broke down below the 131 level today, and we still think we've got another 100 pips to go to that side. We've locked in $1,000 profit on this. So the next price objective that we're looking at here in the pound versus the U.S. dollar, you'll see comes in at the 130 level. That would be 1.300. We're trading at 1.3110, right? 1.3120 right now. So we could easily make that, and we want to be watching it very, very closely. But it's been doing pretty much what we'd hoped, and we'll just wait and see. We're in the midst of the Brexit fiasco. They're going through the same stuff that we are, only it's there's a lot of people over there. You talk about a 50-50 country, boy, they're 50% of the people want to stay in union, and 50% want to stay out. So going to be very interesting. It means a lot to the European Union, because if they lose one of their big players, that's not going to be good, and that appears to be in the cards, but it hasn't happened, you know, as of yet. I wanted to bring to your attention another one of the cross rates that we deal with quite a bit, and that is the Canadian dollar, because we have this real interesting long-term pattern in the Canadian dollar that is extremely bearish. You can see that 61% level that we made up there at that 136.60 level. We covered the short position on that at 131.40, and what we're looking at now is to get short again if we can get this up to the 134.20 level again, if we're able to get that. The $64 question is, of course, is what we're going to look at. I don't know what that means. We'll have to see what that is. So you have to be more specific on that. So we'll watch it. The last chart that I posted is the Canadian dollar. I hope that's the one yeah, that's the last one I did bring up. Yep, there we go. And that's the one we're watching here. So we'll keep a close eye on that. All right, let's move on here to another one. Folks, this is the one that really is interesting to me today. I want to get this before we get Norm on here. This is the chart of the Chinese hog market, one of the stocks in the Chinese, their hog producer. You can see here, this is the top performing of the Asia Pacific Index. This thing has gone from around 10 all the way up to 140. Now that's what, 10 times? Yeah, well, it is 10 times. Now, let's take a look at what our futures are doing. If we take a look at June hogs, you're going to see here that during that time when they have this big swine thing going on, look what's happened, to the hogs here in the United States. They've been going down. Now, they hit major support at the 78% level. We've rallied about 3 cents off of that bottom, but compared to the other one, it is really it's really quite amazing. So we'll see. Well, that's it. Okay. Anyway, we'll see what's going on. I don't know what happened again. It says here my chart is a long, skinny, horizontal window. Oh, you know what I think the problem is, boys and girls? I know what the problem is. I didn't have it centered. Hold on here. Let's see if we get this right. That should bring the hog chart up correctly. Let's double check. And when we get back, we are going to be looking at Mr. Norm calls it to the minute Winsky. So we'll be right back, folks. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we have the owner and chief technical analyst for Astro Trends out of Naples, Florida, Norm Winsky on the line. Norm, I turn over the microphone to you, my friend.
Thank you very much, Larry. Good morning, everybody.
Go right ahead.
All right, I have my notes up on the screen there, hopefully, page 1. I'm going to quickly review. I was on your show last on the 19th of February, just ahead of the big supermoon there we had on the morning of the 19th, and also on the 20th, we had one of my top things is when the planets get to 0 latitude as they go around the sun. Not only do they go round and around, but they also oscillate up and down. And when they get to that midpoint, that seems to be a powerful energy point and influence on the markets. So let's see, on the 19th there, here's your shopping list I had for you. I said for the full moon, we had corn, Forex, gold, oil, OJ, silver, soybeans, stocks, T-bonds, US dollar from the morning of the 20th. We also had corn, soybeans, stocks, and wheat. And so let's go look at those markets. Here's your corn market. Made a perfect double bottom the 19th to the 20th. And then you had about a 3-day rally there. You could have made a little bit of money. Here's your soybeans. Soybeans made their low right on the 20th. Matter of fact, I sent you, you were kind enough, Larry, to post a chart to show that, I forget which one it was, both I think the beans and the wheat made their low on the 20th, right at the time that Mercury was at 0 latitude, was exactly 11 a.m., and that's when they made their low. Well, that was pretty, I was amazed by that, and I've been doing this a long time. All right, there you go. There's your bean low there right on the 20th. Here's your wheat. Also made a little bit of a low there. All these grains you could have made a little bit of money on. A little bit of a rally for about 3 days. It's not a home run, but at least in baseball terminology, maybe a single or a double, you know. All right, then moving on now. Here's OJ. I think I might have mentioned that one. And it made a low a day early. We allow one trading day leeway for the moon. And there was the 15th low on the OJ. Here's your gold. Gold top right on the 20th and has been down ever since. Here's the silver. Same thing. That made it even cleaner. A spike high there right on the 20th. Here's a miss. Oil was looked like it was going to make a top on the 20th. 2 days later, we went about 20 cents higher. So that kind of spoiled the oil there. So notice so far, all green arrows until we got to the crude oil. That's been our only miss. Here's your currencies. Let's do take a look at a few currencies. They also tend to dance to the moon. So there you go. There's the Aussie dollar, 1 day early on the 20th. Topped on the 20th there, and the next day went slightly higher before it kind of collapsed. Here's your British pound. It made its high right on the 20th, and then had about a 3-day sell-off there. And here's your euro. Also, this about the same pattern. Made a little top there on the 20th. Sold off for about 3 days. Here's your U.S. dollar. Of course, it's usually a mirror image of the euro, and so there you made a low there on the euro. I'm sorry, the U.S. dollar, and made a small rally there for about 2 or 3 days. So anyway, here's bonds. Bonds were really good. They made a top there on the double top. Both, I think you were just mentioning these prices a little while ago. 147.05, I believe, was the high for a double top for the 19th and the 20th. And here's your S&P 500, and it made a little 3-day top there right on the 20th. Because the scaling does not really show you that very well. I zoomed in to show you the 10-minute bar chart here. That's back here where the green arrow is. And you can see you could have picked up, I think, about 25 handles there if you sold on the 20th. So not a home run, but pick up a little bit here, a little bit there, and after a while, it adds up to real money, you know. All right, moving on ahead. I thought you might want to see how my planetary index for February came out. This is kind of my version of the Bradley model. And so I generated that blue line you see there back in January for my February. Began on, excuse me, on Monday, February 4, and I ran February through March 1, and because I like to start on a Monday and end on a Friday. And then I overlay the S&P 10-minute bar chart on top of that. Usually I do that for my clients as we go through the month, nightly, with a nightly update, so we can see what track the market might be on. And so you can see that worked out pretty well. Okay, very high correlation there, I would say. All right, moving on ahead here. Let's look into the future. We got huge stuff coming up here right now. So here's a little bit of a story back on, I started coming on your show in March of 2015, Larry. and came, and apparently I got lucky a couple times. So you asked me to come back in May, and I think maybe the first or second week of May, I said, Larry, we got something interesting coming up here on the May 18th, 19 window. We got Mercury turning retrograde within 24 hours of a new moon. And so anyway, I talked about that a little bit, and then you did something you usually don't do. After the show, you called me and said, how many of those have you looked at? I said, oh, I looked at a few of them. And he said, oh, you said, get me more. So I went and researched back 10 years, and I got 7 or 8 of that pattern. And so I think about 7 out of 8 were all significant turns and tops. They were all tops. 2 dates that come to mind, obviously, that may, well, I'll get to that in a minute. One of the dates that popped up to fit that was, excuse me, was October the 11th of 2007. If you're a market historian, you know that was the high of '07, which led to the big meltdown in '08. So that was the high day in '07. And so that, I nearly fell off my chair when I saw that date pop up. And so then I came back on your show a day or two ahead of the May 18th, 19 window and said, Larry, this looks really powerful. And as it turned out, May 19th was the high for the Dow Jones. S&P futures topped in the wee hours of the 20th at 3 a.m. And that turned out to be the high day of the year for 2015. So that's what we have right now, and over today and tomorrow. Today is the new moon, and I think that's occurring at 11:04 a.m. Eastern time. And tomorrow is, oh no, I got it backwards. Today is Tuesday, the 5th. Today Mercury turns retrograde. Tomorrow at 11:04 a.m. we have the new moon. So we have the 20. It's within 24 hours. I think Mercury turns retrograde this afternoon, so it's within 24 hours. And that same combination. I think of the 10 years I looked at, there were about 8 examples. 7 out of the 8 were all significant tops, or you had a big sell-off, and 1 was a bottom. So we want to see if the market get to an extreme here in the next day or so. Would love, not a prediction, but a great setup possibly would be if we could get back and retest the high we just had with the high we just had. So looking ahead here, another thing, we got a couple of kickers on top of that, if that's not enough. As they like to say on late night infomercial TV, wait, that's not all.
Okay, so, Norm, we'll be back after we pay a few bills. Norm Winsky of AstroTrends will be back with us in just a few minutes.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour. Next on TFNN.
Okay, we're back, folks. We're chatting with Norm Winski of Astro Trend, Naples, Florida. Norm, you've got the mic. Please continue.
Okay, just to sum up what I just went over there with Mercury turning retrograde and a new moon. What I've learned over the many years is normally, you would look and say, oh, Mercury retrograde, just a short-term cycle, not a big deal, but maybe could bring a significant turn in the market. And the new moon, same kind of thing, a short-term cycle. But what I've learned is when two of these short-term cycles get together and converge, it can actually create an effect like a big cycle. So that's what you want to keep in mind. And so tonight we have Jupiter's going to form a 90-degree angle to the natal chart of the U.S., to the U.S. Neptune natal chart, and that could be a change in trend for stocks, T-bonds, U.S. dollar, and also because Neptune is involved, could have an effect on the oil market. Also tonight we have Uranus entering the sign Taurus. Uranus takes 84 years to go around, so the last time Uranus was in this neighborhood was in 1935. So this is kind of a big deal. Uranus changes signs about every 7 years. This is kind of a big deal, and to happen right here in this window is like a huge, I don't even know if you could call it a kicker. It's kind of like if it were for the other things, this would be a big deal, All right, so, and then we got the new moon in Pisces tomorrow, so we'll be watching your commodity index. That's kind of sort of commodities and wholesale prices in general. Your corn, Forex, gold, oats, oil, OJ, silver, soybeans, stocks, T-bonds, U.S. dollar, and wheat. Please note the combination of these four events above is potentially huge, okay? So moving ahead now through the week, we have a moderate thing on the night of the 7th, with Jupiter making a 135 to U.S. natal moon, north node. That's a moderate negative cycle. We have the 8th after the close. Over the weekend, we have another huge cluster. Saturn is going to line up with Pluto. I think Bill Meridian talked about that yesterday. Although he talked about the conjunction, this is by declination. This is the parallels going to happen this weekend. And the markets indicated for that are cocoa, coffee, a huge, because it's in Capricorn, that's a huge cluster for coffee, hogs, stocks, and T-bonds. So over that weekend also, we have Saturn lining up with the U.S. Uranus. That's kind of negative for the U.S. chart there, and especially technology. And here's another little kicker here to add to that same theme with the morning moves north node 45 to the U.S. Uranus. So here's some special dates we have for the stock market. I know this is after the fact, but I had this forecasted for the end of February. I started my March on May, yesterday, and so I had this kind of was between the months there. But there's a lesson to learn here, and that is I had Sunday, March the 3rd, as a change in trend date based on music math. Gann said that there was music in the market. This proved that that's true because if you learn the Pythagorean mathematics for music, Mr. Pythagoras kind of created our Western music system based on mathematics he came up with. You get one of the numbers that pops up is 3,649. If you add that number of days to March the 6th of 2009, that was a major crash low, and you come out to Sunday the 3rd, and as you know, we rallied up to a new high Sunday night, and we topped out right on the opening, Monday's opening, and had a big reversal. So that was a good trading point there. Coming up here, I do Fibonacci time cycles, and that's coming up. I got a date coming up here for the 8th, and then the astro dates, of course, are today and tomorrow for the new moon and Mercury turning retrograde and all that other stuff I just mentioned. And then also next Monday, got you covered for the week. So you'll have plenty of time, several days here, to get back to me, and so you can get the letter for free, and then dive in here and learn all about this. So that's what we're going to talk about next, Larry, if that's okay. Going to tell the folks how they can learn more about this. Just to recap, I reviewed when I was last on your show on the 19th. I gave you those 13 markets. I just reviewed them. I believe 12 out of the 13 are potentially money makers for you. So that's pretty good. I think that's about 92%. Even I usually don't get to 92%. I had a really good month. So anyways, every now and then we get lucky, you know. If you'd like to learn more about what I'm doing and the different forecasting methods I have, such as the GAN math, music math, all that sort of thing, and the astro, I do fractals. Didn't cover those this time, did that before. And just get a hold of me here. You can get the letter for free, potentially. And also, if you like the day trade, I have a very good day trading system. It's been very profitable. So I'll teach you that too. You get everything. I learn everything, pretty much everything I do. And I do that on an individual class. It's probably worth thousands of dollars. And if you mention Larry, you can probably get it for free. So here we go. There's my contact info. Here's my telephone, 239-594-3939. And Winsky at embarkmail.com, or you can call me on Skype at norm.winsky. I think we might have time, Larry, for if there's any questions there in the Tiger's Den or whatever.
Yes, we do have a question. It's from one of our listeners here at TFNN. Tim Bost was on a couple of weeks ago, and he talked about this March 5th thing with Mercury being at a midpoint. Are you looking at that as also a possibility?
No, I think what I found was that all you got to do is have Mercury turning retrograde, lining up within one day. A new moon is very powerful. I don't have to get too complicated. This is really pretty simple.
Well, 7 out of 8 is pretty good. I certainly remember the one in May of 2015, you know, so that was a major top at that point. So, and we're certain at 11 where we could have some type of a correction being straight up like this. So that's also, you know, very important. Norm, we have a question from one of our listeners regarding gold. Any feeling on the gold market?
Yeah, the gold, as you saw on the chart, as you well know, Larry, the market's been coming down. And now we got a new moon tomorrow. I think this would be a window when you might want to look for a possible short-term low on the gold, right? Because my system all works on the high probability, that most of the time, if the market gets to an extreme at these big windows, a high percentage of the time, the markets will reverse. So if gold continues down here or stays near its lows here, over the next day, I think there's a good chance you could put in, at a minimum, a short-term low in gold.
Okay, that makes pretty good sense. We have another question from one of our listeners. This is going to put you on the spot. If you had to do one trade in the next 2 days, what would it be? That's the question.
I won't know until we get there. That's the thing. I don't predict highs or lows. I let the market tell me. I let the plans tell me when to look, and the market to tell me what to do.
May I ask a question?
Sure.
You said March 5th was going to be a key day, right?
Right.
And what's today?
The 5th, and we have a 2-day window here with the Mercury turning retrograde, and the new moon is tomorrow.
Okay, so sometime between today and tomorrow, you're going to have a pretty good trade, I guess, correct?
Probably several of them, hopefully.
Okay, that's good. Well, listen, thanks for joining us, Norm. And if time permits, we'll have you on before Christmas, or maybe next month.
Okay.
No, we'll have you on. We'll have you on again when we have the full moon later this month. How's that?
That sounds great.
Okay, we'll
Thanks
be right
a lot.
back.
I'm looking forward to helping some of your folks, Larry. Call me right away.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back. Thanking Norm Winski for being on. We certainly appreciate it. We want to watch this Mercury retrograde along with the new moon that we're going to have tomorrow. And we've already had a little bit of action so far in the S&P. We did hit that 2798, which was the 61% retracement back. We immediately dropped 13 handles, and now we're bouncing around a little bit between the 78% level of yesterday and the 61% retracement of today. So any move below that 2770 level would signal that we're going to make a larger ABCD move down to the 2750, but that's a little bit early in the day, so we need to watch that very, very cautiously. Regarding the gold, and Norm mentioned the new moon that we've got coming up. Remember, folks, we've come down 2 harmonic numbers from the high, from 1351 down to 1283. That's $68. The harmonic number in the gold is 34. So we're at pretty good support down here at the 1283 level. So keep an eye on it, especially if you're short-term trading the gold. That would be a good place, because now we're down 10 days from the high, and we are extremely oversold. So that would be a place where we'd be watching for a pretty good retracement. And with the new moon coming in, that would be something that we would want to be watching very, very closely. Also, keep an eye on the Treasury bonds. We're looking for an ABCD structure on the upside, possibly to get the market to rally about a handle higher than where we are right now. That would take us up to about 115.04. Today's low was exactly 61% of the low that we made on Friday, so that's going to be an important one to look at there at that 143.28 level. So that is held relatively well. Regarding the euro, we're still down here at this 113.27 level. Hasn't bounced very much. It's a very critical level, because below that sets up that really big number down there at 112.20, and that'll be an interesting one to pay attention to. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.